Hey there and welcome to the channel. If you've ever wondered how the ultra-wealthy make their money grow, you've probably heard about hedge funds. But here's the thing, it's not just for the 1% anymore. You can invest in hedge funds. And today, we're going to show you how to go from a total beginner to a savvy investor in the world of hedge funds. We'll break it all down, from understanding what hedge funds are, how they work, the different strategies, and of course, how you can actually invest in them. By the end of this video, you'll be ready to take your first steps into this exciting world. And don't worry, I'm going to sprinkle in some humor to keep things light along the way. So grab a seat and let's get started. But before we dive into the hedge fund pool, make sure you hit like, subscribe, and share this video with your friends. You'll be the one bringing them into the investment world. Let's go. Alright, let's start with the basics. What exactly is a hedge fund? At its core, a hedge fund is an investment vehicle that pools money from a select group of investors and uses advanced strategies to maximize returns. They're often seen as a place where only the rich and elite park their money, but that's changing. Slowly, but surely. Think of it like a VIP club for investments. You can't just walk in and join. There are some rules. But once you're in, the opportunities are pretty exciting. Unlike traditional investments, hedge funds can use things like leverage, short selling, and even derivatives to make money. They often go after high-risk, high-reward opportunities, which is why they're a favorite for the wealthy. The goal? To provide higher returns than more traditional options like stocks or bonds. It's like comparing a luxury sports car to a regular sedan. Sure, the sedan will get you from point A to point B, but the sports car? It's going to do it faster with more flair, and maybe a few engine noises that make people say, wow. Now, let's dig into how hedge funds actually work. The way hedge funds operate can be a bit more complex than your average stock investment, so let's break it down into simple terms. First, hedge funds are usually structured as private partnerships, meaning they aren't publicly traded and are only available to a select group of investors. Most hedge funds require a high minimum investment, typically around $1 million or more. But there are some hedge funds that are opening their doors to accredited investors with lower minimums. So don't give up hope just yet. It's like a secret society, but with fewer robes and more spreadsheets. Once you've invested, the hedge fund manager, who's often a super smart financial wizard, takes your money and puts it into a variety of investments. The strategy can vary greatly from one hedge fund to another, but the goal is always the same: to make money. Hedge fund managers have a lot of leeway in how they invest. They might choose to buy stocks, short sell them, use derivatives, or even venture into commodities or real estate. The key here is diversification, which helps reduce the risk. And when one investment isn't doing so well, the hope is that another one will balance things out. So now that we know how hedge funds work, let's talk about the different strategies they use to make money. There are a ton of strategies out there, but let's break down the main ones. First, we have long and short equity. This is where hedge fund managers buy stocks they believe will go up and short stocks they think will go down. Essentially, they bet on both the rise and fall of stocks. It's like being able to play both sides of the game. Think of it like betting on a race, but instead of just picking a horse to win, you're also betting that the other horses will trip. A little aggressive, but it works. Next, we have global macro strategies. These are a bit more complex, but basically, hedge funds using this strategy invest in large-scale economic trends like currency shifts, interest rate changes, or even political events that might affect the global market. It's like watching the weather to predict if you should bring an umbrella, except in this case, you're predicting the economic forecast for the world. No big deal, right? Another popular strategy is event-driven investing. This is when hedge funds invest in companies based on specific events like mergers, acquisitions, or even bankruptcies. If they believe a company is undervalued due to an event, they'll make their move. Imagine being the person who buys concert tickets just before a band's reunion tour gets announced. You're not just waiting for the concert, you're betting that everyone else will scramble to get tickets too. Alright, let's get to the good stuff. How do you actually invest in hedge funds? Well, first things first. Hedge funds are usually only open to accredited investors. An accredited investor is someone who meets certain financial criteria, like earning over $200,000 a year or having a net worth of $1 million or more. Yeah, not exactly your average weekend warrior, but don't lose hope. Some hedge funds are starting to offer lower minimum investments or funds of funds that allow you to invest with less money. So it's becoming a bit more accessible. One way to get in is through hedge fund mutual funds or exchange-traded funds, ETFs. These are like a group of hedge funds pooled together in one investment, and they allow regular investors to get in without the big buy-in price. It's like ordering the party platter at a restaurant. You get a little bit of everything without having to pay for the entire meal. Another option is through private equity firms or fund of funds. These groups pool money from investors and then invest it in a variety of hedge funds, which allows you to diversify your exposure to multiple strategies. Like all investments, hedge funds come with their pros and cons. So let's talk about what you can expect before diving in. On the pro side, hedge funds can generate high returns, especially if the manager is experienced and using the right strategies. They also offer diversification, which can help reduce risk in your overall portfolio. And if you want to feel like one of those wealthy tycoons from the movies, investing in hedge funds gives you access to a world where the rich and powerful play. Pretty cool, right? But on the flip side, hedge funds come with high fees, which are often referred to as the 2 and 20 rule. 2% annual management fee and 20% of the profits. Those fees can add up, and it's important to weigh them against the potential returns. They're also high-risk investments. While they can bring in big rewards, they can also lead to major losses. And of course, you can't easily access your money. Most hedge funds have lockup periods, meaning you can't cash out for a set time, sometimes years. Before we wrap up, here are a few tips to keep in mind if you're considering investing in hedge funds. First, do your due diligence. Make sure to research the hedge fund, the strategy, and the manager's track record. It's like dating. You don't want to rush into anything without knowing what you're getting into. Second, diversify. Don't put all your eggs in one hedge fund basket. Spread your investments around to minimize risk. And lastly, always be aware of the risks. Hedge funds can be very rewarding, but they are also risky. Be sure you understand what you're getting into before committing your money. So, there you have it. From understanding what hedge funds are, to how they work, and finally how you can start investing in them, you now have a solid foundation to build on. Hedge funds can be a powerful tool for growing your wealth, but they come with risks. So make sure you're investing wisely. If you found this video helpful, hit like, subscribe, and share this with anyone you think might want to learn how to tap into the world of hedge funds. The more we share, the more we grow, right? Let's help everyone level up their financial game. Thanks for watching, and I'll see you in the next video. Until then, keep learning, keep investing, and remember, financial freedom is just a step away. Take it.